Greetings, Dr. Jeffrey Scott here. This is my Market MRI Pro update for June 12, 2025. Solemn night. Could have been a happy report based upon the market, but the futures are diving as Israel strikes out against the Iran nuclear and military, specifically missiles. This was very well telegraphed as we pulled out folks from the Middle East. The government did today for safety purposes. And ever since the talks with Iran and the U.S. broke down, I think oil's been shooting up in anticipation of this. And you know what you get. And again, this is 9:30 at night. It's about 30 minutes since I saw the news. The dollar is up a little bit. Oil is up $5 a barrel. Um, Gold will probably rally. It's up $47. And meanwhile, as you'll see, the futures are down significantly. Again, it's not where they open. It's not where they are at 9:30 the night before. It's where they close. And on what had otherwise been a strong week. And we started talking in the last couple of videos though about, are we getting closer to periods of time when we may have some more risk? And this is things that I don't know if it's a black swan event, but it's certainly something that it's hard to prepare for. So again, it's June 12th. My name is Jeffrey Scott. Hopefully we'll see things calm down there. MarketMRIPro@gmail.com. Google Groups is Top Down Trader. I welcome you to my video. I'm an independent trader. I sell some software tools. I don't sell them very well because I'm not trying to close anybody. People like what I do. They reach out to me. I like to teach. I've been doing these videos for over 25 years, and I do them to help my friends and let other people watch. This is for educational purposes only. Anything I talk about is in the spirit of education, not investment advice. The intent of the video is not to tell you what to buy or sell, but to show you how to use the various tools of top-down trading. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky, and you should always consult with your financial advisors before making trades. And I have tools in multiple platforms. I use most of the time Market MRI Pro. And imagine if I had somebody who was watching me who built this for me. It's amazing what a talented programmer can do. My Google group is called Top Down Trader, and love to have you join. I post some comments there, include these videos. Sometimes the videos make it to YouTube, and sometimes they don't, depending upon my mood that night and the time I have. So Friday was going to be interesting anyways. We made a few CPI and PPI, both came in lighter, but as soon as it comes in lighter, people discount it and saying, well, that's because the tariffs are not in. So they probably didn't get much of a jolt. We have some progress with China, or we don't, depends on who you listen to. I mean, we got the negative thing with going on with the unrest, which may be overblown by the media, going on in California and other places. But that sentiment, I remember when the first time the sentiment came in last year light, and the market really sold off, and maybe that was a surprise when that happened. So I think that can be market moving news. But still, I think all eyes are going to be on retaliation from Iran. Remember, they've been doing a tit for tat on rockets, and I think Israel was next one up to fire back at Iran. They showed some restraint after the most recent time. And, a couple of things that people don't always realize, a state of war does exist between Israel and Iran. They have never agreed to peace. Iran has never recognized Israel. And Iran is well known for supporting, and I'm not being political here, I'm not taking sides, I'm just saying the facts as I understand them, that Iran supports Hezbollah and Hamas and has always supported militant activity against Israel. I'll just leave it at that. Again, not taking a side, saying what's right or wrong, just I think that's a well-known fact, and there is no peace between those two countries. If we look at earnings, Restoration Hardware up big, RH and Adobe not doing much after hours. And again, who cares about any of this? It's what happens now. Will this thing remain contained, or does it expand outside of just those two countries? It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. On to the charts, and I'm going to go right to actually my trade station, because I think at this point, let's take a look at the futures. ESs you could see pulling right into automatic generated support and down about 100 points. NASDAQ futures pulling into support, broke trend line really at the opening of the futures before the retaliation or the attack by Israel, down to support, down 375 points. Right now, the Dow is blowing through support. The Dow had some issues today with Boeing and that. I'm so sad, that wreck of the Air India jet, down over 640 points. The Russell blew through support as well, still holding above the 50, as are the others. The Russell is down now 51.90. The volatility has spiked. The futures are up 1.65. Up to 21. I think they were closer to, well, if we look over here, is that, which day is that going to be? You open up my data window, and yeah, that is the futures. It's futures, so it's already looking at on Friday's futures. So on Thursday, it closed at 20, low in 1997, and these are the VIX futures, and they're now at only up a little. Let's see, 27. I'm trying to get. Oh, I'm sorry, I got the trend line there. Looks like it is up to 22.25, so a little bit, not that much, 8.26%. And you can see the dollar's bouncing a little bit on this news as well. So obviously, this is something that will be developing, and it would not be the first time that the rockets fired, the futures dropped, and by the time the day closes, things come back. So news driven, it can change on a moment, but right now it's hard not to mention what's going on in the big picture. Just something else before I jump into the program, into Market MRI Pro. I talked yesterday about my concern. This is an ancient program. I mean, when I say ancient, when was the last time they put their copyright on it? 2010. This was probably the best charting program I've ever seen in my life. It's called Stock Finder. I think it originally came out called Blocks. And what's really cool about it is it allows you to create your own signals. And one of the signals that we have created here is a multi-time frame MACD divergence. And I run it against the S&P 1500 every night. And the question's going to be, how many do I see on a nightly basis? And usually it's 2, 4, 5, 10. And I showed yesterday that we were high. We got 76 of them. So that means 5% of the S&P 1500 has MACD divergence. So, what does that mean? Here's Rockwell Automation going higher highs and lowers on, look at this, they haven't even flipped positive on the histogram. And there are some really big stocks here, stocks that I think are important to the market. So I think there's something to be said about that. Even one of my favorites, Amazon, when you're starting to go higher and the MACD is not following, that's not a good sign. So reduced participation perhaps just adds to the risk of the market. So I just wanted to point that out. You have to have Stock Finder, and if you do, and you contact me, I'd be in a working version of Stock Finder. I'm happy to share the files for the divergence. It's an ancient program. It's not supported, but boy, there were some smart people creating things like this scanner. All right, let's open up Market MRI Pro. And again, for those that have not seen this tool before, this is a tool that one of my followers basically started by creating me trading view indicators, which are great. And then next thing I know, he created me an entire trading system. My ask was to have a scanner that would work real time, looking for the signals that I like to look at. So in case I had free time during the day, I'm just opening up the windows. In case I had free time during the day, I could go and use the machine and see if I could find anything that was actionable, especially like 3:45 on the East Coast before the markets closed. And he built the scanner and he kept on going. And what he ended up building is a full-fledged semi-automated, and I'll show you my semi-automated top-down trading tool. And by the semi-automated, I'm really referring to the fact that all the windows are built, and you'll see, I mean, we're at 10 minutes of me blabbering because of the missiles and the attack Israel and Iran. But you're going to see how quickly I can do a fairly exhaustive top-down review of the market. All right, we're going to probably skip that one today. All right, let's go into the daily briefing. The daily briefing sits on one of my desktops all day long. And every time I want to look at it, I click that. It takes about 3 seconds to update. And the reason why it sits, it has really my heads-up display of what I need to know about how the market's doing. Obviously, we're after hours. You can see the VXX ETF volatility closed up 1.29, Spiders 0.4, Q's 0.23, Diamonds 0.21, the Russell lagging at minus 0.4. Not a surprise after the low close doji and failure at the 200 yesterday. The dollar was down again 0.73. As we said, it's rallying on the rockets or missiles or bombs, whatever, and Bitcoin was down 1.84, and it seems to be going down further after hours. If we look here, we can see that the Spider finished at the high of the day, even though it was only up 0.4, and even the Russell, which lagged, was at the 70th percentile of the day. So stocks finished in the upper part of the range, even though they weren't a very big move. To me, that's something important. When I look at the net new high, new lows on the NYSE at 1 year and the NASDAQ, they're both basically slightly positive, and that's a good thing because bear markets are built on new lows and bull markets are built on new highs. And technically I think we're 21% off the lows in the S&P, so that kind of means we're in a new bull market. If we look down here, we can see the S&P 500 sectors. If we rank them by percent change, you could see in the market on Thursday, utilities, tech, healthcare, staples. It's a weird bunch. I mean, defensive, utilities, healthcare, staples, and real estate up at the top. So some people are worried, and including me, as I've talked about, maybe we're running out of gas, so we're going to consolidate here. But then you got technology sticking its head in there. I guess a good day for AI related. Down here we have some of the leading categories. You can see gold miners, video games, Norway, which has got a lot of commodities, software, silver, metals, production, home building, copper, cybersecurity, data centers, semiconductors, cybersecurity, uranium, some of the same old up at the top on the one-day performance. Over here is one of the true powers of the tool, and this is a great breadth system looking at winning sectors, industry groups, and advancing stocks. The blue or green is today. The gray is yesterday. You could see better performance on sectors and industry groups on the S&P 1500, but still less than half, 47% of the stocks were up. NASDAQ, again, better on sectors and industries, but only 38% of the stocks were up. And broken record, same on NYSE, but here 51%. So even though the indices were mixed, leaning higher, it was kind of a 50-50 day if you look at stock performance. If we go into the timing model, this is a built-in timing model. Short term, it's the daily. These lines at the bottom that are green are the buy signal. And you can see I like retest, and we kind of got the buy signal as we broke out here. So buy signal came in early on in the advance. It went to a sell up here before the market rolled over. The intent is to get you out of bad markets. It's never going to get you in early. You can see we're in long-term buys on the daily, on the spiders, the Qs, the Russell, and the diamonds. Now, the longer-term model to me is what I really like to follow. And I just wanted to point out, as of right now, pending the market close on Friday, we remain in buys on all four of these on the weekly as well. When I look at the index ETFs and the reasons why I've been concerned that if we're going to take a pause, this is the right place. This is even before the missiles flew, because frankly, the markets, which have had a massive V recovery, they do seem to be slowing down. And this point here represents either the all-time highs or where we had double, triple tops. I think that's going to be a challenging area to get through. And I do think it would not be a bad thing to see us consolidate here before that big run. So the spiders were up in the market, 0.4% today, a nice looking candle closing near the highs. But reality says we are still have to get through some pretty big resistance above. But what a move off the bottom. If we look at the Qs, and we're going to see a similar story as we look through this, the Qs in the market were up 0.24. Again, it looks like it's consolidating after this massive run up. And again, we are not that far. If you look at for closing highs in this range, 540-ish, we're 2 or 3% away. We are not far from all-time highs on both of these indexes. And again, it's not a surprise to see some hesitancy there. The diamonds are not that much different than the others. And you could see they've had a nice run up. Let me flip that thing so I can. And you could see their highs are back here though at 450. We're at 430, so 4 to 5% away, not horribly. So at least on these three, I think the story is we are still moving higher, but we looks more like we're going into a consolidation and not the same level of ascent. Now, the bearish one of the bunch, and one that I have to pay attention to, is we had a bearish engulfing pattern over here on the diamond, on the Russell 2 days ago, failing at the 200. Gap down, although it closed higher than it opened, but still down 0.4. That's a bearish look. Now, we could certainly reverse if the market pulls higher, but will this be an excuse to go down to the 50? And if that doesn't hold, will this trend line hold? And we should probably extend that a little further. And where are we going to end up? So it'll be interesting to see. I think that at best these are mixed, and I'm not looking for a big resumption of the uptrend until we work off what's going on in the Russell. You could see down here the VIX on the session was up 4.40, and we talked about it's up significantly. After hours, although is that the 13th? No, that's still the 12th. And then the dollar on the market today was down, but after hours with the missiles flying, no shocker, the dollar's up. Commodities, all right, gold broke out of its wedge here, so a little bit of a wedge pop, volume and a breakout signal. Gold looks like it wants to go higher. Silver, also a nice reversal candle, and I think both of those will be up with the missiles raining in the Middle East. Oil was up on the session. You can see it broke above the 200 here and then held it today. Probably going to open up much bigger. And then natural gas is below the 200, and even though it was up a bit. 10-year and the 30-year were both down nicely in the market on Thursday. 1.25 and 1.28% and pulling into their 50. An optimal place for you to expect the market to bounce, but we'll see how this is impacted by what's going on in the Middle East. Buckets, pretty much a bell-shaped curve. The fact that we see more gray here means we have less stocks up at the top than we did yesterday, but interestingly, we've got some more gray here. So I really think stocks are coalescing around the percent B of 50%. So kind of a neutral looking picture here. Market breadth, boy, it would look different if markets were open when this Israeli attack on Iran occurred. And you could see a couple things. We had a Bango today, which is this X on the NYSE, a sign of irrational exuberance. You could see that at least on the stocks above the 50, when you look to the left at these prior highs, you're already getting a little bit of overbought on the stocks above the 50. Stocks above the 20 are also up high. Stocks above the 200 are laggards. You can see they came down a little bit today on the NASDAQ. And if we look here on the left NYSE, we got more new highs than new lows on both. AD line positive on the NYSE, not on the NASDAQ. While interestingly, up-down volume is positive on the NASDAQ and not on the NYSE. So my gestalt on the market, and the reason why I started with the futures, is I think you got to be very careful based upon what we saw with the futures. And it's really going to reduce my stock searching tonight because I'm not going to come in and look for things where the market right now looks tenuous at best, and I'm not going to be out here pushing to the long side. However, there's also a chance that the market will hit, if we opened up right now, the market would probably open up considerably lower and then fight the rest of the day coming back and finish with much more muted gains. The gains might be back by the time we open. It still could set up some nice buying opportunities, but where? And that's why I hesitate to go deep in stocks. So I'm going to show you just a couple things on stocks, and then we'll say goodbye and let's see what happens. And peace would be a wonderful thing in the Middle East, but first you got to recognize someone's existence to be there. Discretionary is down, interestingly, but technology is high. That's probably a lot AI. You can see staples are down in their pattern, and utilities and real estate, they all had little nubbles higher at the end. I think you'll see a reversion to defensive plays tomorrow, at least at the open. So I said I'm not going to talk about stocks, but let me just show you. If you want to, I must have mentioned this stock. If I haven't mentioned it 100 times, I haven't mentioned it 100 times. But if I was looking for something to buy, if there's a sell-off tomorrow at the open, substantial, I talk about McKesson a lot. I am in healthcare. I have sold 2 companies to Cencora, which is the old AmerisourceBergen. I've sold 1 to Cardinal Health. These companies as a genre just know how to make money, and they make money on very small margins but massive volumes, and more importantly, they are operators par excellence. And I think of all of them, I've always been impressed with McKesson. And so why am I talking about McKesson today? Because McKesson just had another breakout. This is just, let me do this so I can reset it so it's not tied to price. But look at this move. Beautiful uptrend, pull back to the 50, textbook. You could have bought it yesterday. Even better today because it's taken out the recent highs. Its high low jump is at 60.86. Relative strength and OBV are taken off today. I really like McKesson. And oh, by the way, my favorite signal, the little 2 dots? They got the 2 dots. So, the only thing that really bothers me about McKesson is we have to deal with what happened with Iran and Israel and how that may impact on the market. Let's just see if anything else is the 2-day signal. I really love these 2 days of momentum plays, and McKesson is going to be on the list. And let's see what else comes up. Here we go. Frontier, these are shipping, I think. I don't know if it's energy or I think it's energy shipping. Breaking above the 200, it's going to probably spike here with what's going on with Iran. They'll be able to raise rates. Genie, I think this Genius Sports. Let's see if I'm right. And notice each of these have the 2 dot sign. Sideways move, you could certainly, whoops, get back here. Yeah, I had issues with trend lines yesterday. I think I better call my partner Praveen, the intelligent, really good programmer, and see what I'm doing wrong. Let me just check one thing. If I fix it there, nope, that's not doing it either. Well, I was just going to draw a trend line here and show that it broke out today. So I think this looks interesting, but so far I like McKesson. Speaking of the devil, here's McKesson. If I had to pick one, I think right now my choice would be McKesson, although that Frontier looks interesting. MTG, is that Housing Meritage? Let's see. Nope, Magic Investments, kind of consolidating up here. Does it pay a big dividend? It pays 2%. And then I don't know what this one is called. Let's see what it is. It's a SPAC, never mind. So I'm going to stick with McKesson. I love this whole distribution genre, but keep in mind if somebody comes in and finds a way to slice drug prices, their margins are tied to a percentage of service fees that they get based upon price. So as long as drug prices go up, so does McKesson. Have a great day, and let there be peace.